This video is intended to provide insight into the mini Greedometer algorithm and its application to stock market crashes. Let's take a look at the mini Greedometer sequence associated with the crash of 2007 to 2009. Some nomenclature first. There's the baseline and the top line. These lines contain the sequence of readings of the mini Greedometer, shown here in red. Of course, the S&P 500 is still in blue. What you'll quickly notice is there's a strong correlation with points in time where the S&P 500 reverses course when the mini Greedometer reaches the baseline and the top line again and again. Okay. This chart is actually a previous implementation of the mini Greedometer algorithm used in 2007, 8, 9, I think through 2010. Somewhere in 2010, 2011, the algorithm was tightened and changed to reduce the number of sort of bouncing along the bottom that was seen here. Well, this is fine, but like a double test and a triple test here. Let's look at the crash of 2011. Now, the crash of 2011, some may say, well, hang on, there wasn't really a crash of 2011. There was a drop that summer. It was an opportunity to buy the dip. What's the big deal? If you think that's the case, then you absolutely are misinterpreting what happened. Clearly, as shown by the mini Greedometer sequence, right, it's being very well contained by the baseline and the top line, extraordinarily well contained. It's no longer spending several weeks bouncing along the baseline as the other one did because the algorithm was improved or tightened, and pretty strong inflection points here, initiation point, but inflection point here, 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 and ultimately a breakout. This breakout in 2007 was caused by the QE1 and QE1 expansion in March, a breakout above the top line. This also was caused by a tag team effort from the Fed and the ECB, Operation Twist and ECB Eltros 1 and 2, to break out here and sustain the breakout. Okay, but for reference purposes, there was a 20% crash in the S&P 500 that summer, and if you were paying attention to the stock market, you would have had almost no idea. If you were paying attention to the Greedometers, you would have been waiting for it and looking for an opportunity to profit from this sucker rally and this crash. Again, sucker rally and crash. The slope of the sequence is quite substantially steeper, so you should have expected a faster crash, and of course a 20% drop that summer is a lot more than this sucker rally or this crash. And look at how long it took to see a 20% drop here. So the mini Greedometer told you there would be a faster and rather violent crash, and certainly it did kick off that summer. Again, it was stopped by our friends at the Fed and the ECB. Let's look at 2014. There were two mini Greedometer sequences in 2014, basically the first half of the year and the second half of the year. And I should remind viewers or listeners that every Greedometer and mini Greedometer sequence has ultimately been truncated or stopped by new central banker actions, not just the Fed, could also be the ECB, could be the People's Bank of China, the Bank of Japan, any of the key major central banks. So let's enlarge this a little bit. There's a lot of information on this chart, so feel free to pause it and afterwards and learn more. The mini Greedometer sequence that was seen the first half of this year, 2014, was exceptionally well defined and constrained by the baseline, and was beginning to be exceptionally well constrained by the top line when, again, the Bundesbank, as we all know, chimed in late March. And instead of it, when I said earlier we should have seen or anticipated a larger drop in the S&P, why did I say that? I said that because the mini Greedometer reading, as you see, ran out of breath here. It didn't reach the baseline. It would have happened. Reaching the baseline would have happened in space and time here, and there was obviously much further to go here in the mini Greedometer, and much further to go in terms of the S&P. Irrespective, we should have expected the mini Greedometer to rise back to the top line and the S&P to rise back to retest its previous peak within 1%. It most certainly did. This would have been here the crash launch point. It wasn't, however, because our friends at the Bundesbank and then the ECB led a nonstop charm or threat offensive to do whatever it would take for months that spring and that summer, ultimately truncating that sequence and giving birth to the ninth sequence. this is interesting. Look at the 3 weeks in a row here of the mini greedometer walking, if you will, along the top line, beautifully obeying this presumed and confirmed top line, staying constrained by that top line until ultimately breaking out when there was enough to sustain cause another risk on party, and of course initiate the next greedometer, or in this case mini greedometer sequence, the 9th mini greedometer sequence. This one started out being very well constrained, very well defined by the thick baseline being shown here, right? Until our friends at the Bank of Japan chimed in here to spike the punch bowl and further enlarge their existing QE program. That was a surprise intrusion. Had that not happened, I anticipated the mini greedometer reading would have bounced off of the baseline, which it did, risen to around here, my expected top line, would have spent a week, maybe 2 weeks here, and then dropped again lower to what would have been a baseline, another baseline location here. This drop didn't happen. We didn't see the baseline visited here because there was there was 4 central banker surprise intrusions. We didn't see the mini greedometer readings drop to the baseline here because there was 4 surprise central bank intrusions. One by the Bank of Japan here, 3 weeks later, a combo intrusion by the European Central Bank and the People's Bank of China, as commented here. But it was a few weeks later around here. And then another recently threat by the European Central Bank. So this had been warped, a bit of a drop, a climb back to the old top line, and last week a breakthrough to what I assume is a new top line for this sequence, if this sequence is sustained. If this sequence, however, is going to be truncated, it'll happen this week or next week, and it'll give birth to the next mini greedometer sequence, the 10th greedometer and 10th mini greedometer sequence next week, maybe the week after.